Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, first things first, I'm going to have to ask you to bear with me. I am unfortunately absolutely full of cold at the moment, my lungs and my brain apparently, as I seem to be a little slow-witted as well as struggling to talk. So my voice is in and out at the moment. I'm going to do the best I can with it and hopefully it will hold out for the rest of the video. So, we're going to be looking at gold now for the next few minutes, and I'm going to try and keep this brief for my own sake. So let's get straight into the Elliott wave count. We're on the weekly time frame on arithmetic scale here, and first thing I want to do is just have a quick recap of where we are in time and space overall. So we are currently in what I believe to be a fourth primary wave. We have our wave 1 here, peaking in excuse me, July 2016 and bottoming in August 2018. We then have big primary wave 3 up here, which I think peaked on August 2020, and we've since been correcting this wave 4. Now, inside of this wave 3 we have our intermediate wave. Let's just bring that up, where we get an extension in the wave 5. More common to see an extension in the wave 3 than the wave 5, but what we did get was a very expansive flat pattern. So when you look at the wave 3 here, it's quite easy to say, oh well, Tom, that's too short, and you know, you'd be amazed, it really isn't. If we come down and we just measure from the top of wave to the wave 1 to the bottom of the wave 2, you can see we get an absolutely perfect 1618 extension. Now the only reason I'm bringing that up is someone touched on it from a previous video, basically saying how don't you think that wave 3 is a little small? It's actually perfect. It's a 1.618 extension of wave 1. It's absolutely to the tick. So what you see is just an expanding flat, 3 waves in an A, 3 waves in a B, and then down to a lower low, 5 waves into a 4. So perfect expanding flat pattern here. And then that extension occurs in the wave 5. So let's come into the more recent price data and see what we can see so far. Now we've been tracking this for, well, 259 days is how long this correction wave 4 has been going on. It's not as long as the wave 2, which was 700 and something days. The fact that it is a significant correction fills me with confidence that it is the primary degree wave 4, as it excuse me, as it is a significant time frame. So it matches primary degree wave 2, not in length, but the scale's the same. It fills me with confidence that we're seeing such a substantial correction. Now, I've labelled this multiple times in multiple ways, but we've all got the same ending section to it and inside of this channel the whole time. So we're still just waiting to confirm the bottom of this correction at the moment. Now, I have a flat pattern here, and I also have a WXY, and I've even worked on a zigzag, and they're all basically ending the same way down here, and we're looking for 5 waves down to complete the C leg of the 4, or 5 waves from a lower point on the WXY to end the 4, but it's all basically sending us in the same direction, ping-ponging around inside of this channel. So if we come down to the most recent price action, and we come down to the 2-hour time frame for a moment, and we excuse me excuse me, right then, so we are looking at 5 waves down here on the minor time frame into the intermediate C, into the primary wave 4. Let me just show you what that looks like. Okay, so 5 waves down in a 1, 3 waves back in a 2, and then 1, 2, 3, 4, 5 waves down in a 3, and then what definitely to me still looks like a 3-wave structure, W, X, Y, I'm saying. Now the reason I'm saying that is because we have what appears to be a clear 3-wave move here, a clear 3-wave move here, and then a clear 3-wave move here. So with our invalidation point for this wave 4 is just above us here. Now I've said minute because I've changed the chart and saved it as a new chart, and I never updated this, to be honest. That's why it still says minute. So let's just change this now to minor minor wave 4 invalidation. We haven't gone past it. at 1801 spot 37. We're still underneath it, so we're still valid. So if this is complete, and I'm going to say here, I think it probably completed today. To be absolutely honest with you, we sold down quite aggressively today. Now it could be that the 5 waves in the sea is complete. If I just show you that what I think we're working on here is a zigzag in the Y. So if I just move the Y up here and the 4, you can see the price action hasn't gone through it. So a zigzag here in the Y to finish this 333 correction WXY into the minor wave 4. And I think I can see in the C leg here, I think I can see either 5 waves with the 3-4 here into the 5, or you could argue, excuse me, you could argue that you've just got a little bit further to go. 1, 2, 3, 4, 5th, really pushing the boundaries of this minor wave 4 invalidation point before finally selling off. But there are 5 waves here because we've got a little 3-4 here. So inside of the, this is a 1-2. Inside of the 3, you have got 1, 2, 3, 4, 5 waves. Okay, so you can call it done. I think you can call it done by saying 1, 2, 3, 4, 5 in the C complete. 5 in the A as well, 3 in the B, zigzag 5, 3, 5 as part of this 3, 3, 3 structure. So that's what I think the Elliott wave count is for the moment. I'm going to say it's complete into a wave 4. It feels like it is. It looks like it is. We'll know. We'll know soon enough if it isn't, because it will go above that invalidation point. Now, if it goes above that invalidation point, then the count as it stands at the moment is incorrect, and we have to come back and rejig it and probably assume that we bottomed here in this double bottom. Okay, and maybe we came down into a truncation here, and then now we're impulsing. Okay, now if that's the case, then this was a 1-2, we're coming into a 3-4, and a 5 will take us above this level, and then we'll retrace 3 steps back, and then we can discuss a long trade from that point. But until we see that 5 up and 3 back, we're still assuming we're bearish, and we've completed a minor 4 with a 5th to come down, and we shouldn't jump into this trade just because we've bounced. We want the same setup we're always looking for. Okay, so that concludes the Elliott wave count section. I'm just going to quickly move on to the basic technical analysis now. Sorry you have to listen to me snuffling and coughing and choking, but I really am trying to do my best. So we'll just get rid of the Elliott wave count and just do some basic technical analysis here for the moment. We're going to come out to the weekly time frame and see what we can see. Log scale, we just need to zoom back into all this noise. Okay. Right, so we are below the 20 exponential moving average. We're now back above the 10. The 10 did cross through the 60 exponential moving average, which is the orange line here. And this, I should have mentioned, sorry, that the yellow is a 10 exponential, the blue is a 20, and the 250 exponential moving average is down here in green. And you can see we're still a long way off of that on the weekly time frame. We are back above the 10 exponential moving average, testing the 20 at the moment on the weekly time frame, and we've got a wick through it, but we look like we've been rejected here. So we'll see how it looks on the daily time frame in a minute, and if it looks like it's rejected on the daily time frame, then maybe we'll get that final move down and we can see what we're looking at. So then we've got an RSI here set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. And we have a MACD here with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. So we can see that we've come down to oversold conditions, bounced back into neutral conditions on the RSI around 47 on the weekly time frame. We do have a crossover on the MACD of the short-term moving average over the long-term moving average with the first green bar on the weekly histogram occurring for a long time, 259 days-ish. So this does support that maybe we bottomed here with this double bottom pattern on the weekly time frame. Double bottom, return to bullish momentum, but we've got to see some kind of follow through, and the follow through that we want to see is a return to bullish momentum, green bars appearing on the histogram, a further push up on RSI, potentially into overbought, while we see that 5-wave structure emerge and a 3-wave pullback. That's what we want to see before we can take on a long trade. Well, before I will, you can do what you like. Right, and so let's come down to the daily time frame. We can see how with the 20 and the 10 having crossed through the 250 and the 60 having crossed the 250 with the price down here, we have tested the 250, wicked through it and been rejected. So like I said, a move through these major moving averages on the daily time frame must be supported with momentum, which we do have. Low, higher low, probably another higher low coming, higher highs as we head up into overbought conditions, return to bullish momentum on the MACD. So we do have support from momentum at the moment, but we don't have support in the wave count yet. We need to be certain. So, and combining the two at the moment, we're not out of the woods with the basic technical analysis. Things are looking more positive, but it could just be a temporary correction before moving lower. And a return to bearish momentum on the daily time frame here on the MACD with a failure to break that minor wave 4 invalidation point with a 3-wave mover would convince me we're heading lower. So in the meantime, you just got to keep your eyes on that one level. Let's bring it back. 1801 spot 37. If we cross above that, then we are looking for a 5-wave impulse and a 3-wave back. Then we can discuss a long trade while we rejig the count. Until we go through that, we have to assume we're still bearish. Okay guys, that's going to be it for gold. And if you're new to the channel and you've liked what you've seen, sorry I sound like shit, but please consider subscribing to the channel. Smash the like. Let us know what you think in the comment section below if you like what you've seen, or if you want to tell me something. And hit the bell notification icon to remain informed of future video releases. Thank you again to my patrons as usual. Your support is greatly appreciated. If you're interested in becoming a patron, please follow the link in the description box below, or the link on my YouTube page on the channel's banner. And there's also a link to it in my Twitter feed as well, which you should go and follow. But feel free to go over and have a look at tiers and see what's available. And if you're interested, please consider becoming a patron. Okay then guys, all the best, take care, and I should be back with you with another video soon. I'm sure my voice will improve, and hopefully have another couple of videos out before the end of the week. Take care, all the best, bye bye.